In today's session of Visual JForex, we'll be starting afresh with the indicator named momentum. This is the MOM indicator, and you will find it amongst the various indicators which gives us the idea for the momentum in underlying instrument. This is a, you can say, unbound oscillator in a sense that we don't have any upper limit or the lower limit on these indicators output, and this indicator gives you the idea for the rate of change in the underlying instrument. If you want to go into the technical specifications of it, I would recommend that you refer to the earlier introductory session which I had done on this indicator. In today's session, we will be more focused on the functional aspects of it. So let us head to the JForex platform. Here, this is the Euro USD chart, and you can find this indicator pretty easily. Here it is. And as you can see, this gives us the idea for the trend. If we have the value in negative territory, that is the output value for MOM below zero, it means the underlying momentum is on the bearish side. And if we have the value above zero, that is indicative of the bullishness. But what we will do in today's session, instead of relying on the single time frame, we will be looking for the trend on the hourly time period, and along with that we will use lower time frame charting like 15 minutes to look for the optimum entry point. So the idea is going to be that we want the MOM value to have been below zero when we are looking for short sell trade, and if we are looking for buy, then we need MOM value to be above zero. So that will be the decisive criterion, and after that we will be focusing on the optimization of the entry point. So here we will not be using this indicator as a guiding factor, and rather than that, whenever we have some retracement and after that if we see that the trend as per the hourly time frame is now again coming back and taking hold, and we have the chart for the underlying instrument showing some weakness creeping back, and the mm value starts to dip from the recent high, we will look to initiate the trade. So we will be comparing the last 15-minute candle close output for the MOM with the value half an hour back, and that value which was there half an hour back will be compared to the value 1 hour back. So we will be looking at the situation where we have the value for the shift 1 of 15-minute candle period below the output value with the shift 3, and the output value with shift 3 should be higher compared to the value with the shift 5. So this is how we will be optimizing the entry, and as is the basic criterion, we will need the hourly time frame value to be below zero. And here we will use two blocks of one with the shift value of 1, which will retrieve us the value for the last hour, and another one with the look back period of 3, which will help us in making sure that the momentum has been bearish for a while and we are not really getting caught in the situation where we have just oscillation around the zero line. So to make sure that the momentum is strong, we will be utilizing this condition, and also to make sure there is enough of momentum on the price action front, we can use a couple of get historical candle blocks as well. So now let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. The first thing we will need to do is to get the instrument subscription done. Prior to that, I will give you the basic idea of this indicator block. Here it is. we have to define these four input parameters depending on which we will be getting this output, the out 14, and this value then can be utilized to set the conditions. And as I said, we are going to work with two different time frames, so we are going to need quite a lot of blocks. I think 5 2 for hourly time period and 3 for 15 minutes. Prior to that, first we'll carry out the instrument subscription, logical, and in this case we will be using ontick as our start point. Default instrument should match the last tick instrument. Last tick instrument then should be Euro USD, as we are working with the Euro USD again. If you want to use another instrument, all you have to do is choose different instrument from this, and also make sure that default instrument is the same as the instrument taken as the second parameter, second input value in this block. And position amount needs to be defined. This is going to be 0, so there is no open or pending order currently in place in the system. And after that we start adding these blocks. Here, as I said, this candle period is going to be hourly. Shift 1. Time period will remain default 10. Here it is. We are going to need 5 of these blocks. And with this, I will change this to hourly. and this P will be of 15-minute time period. Shift value will need to be changed now. This is going to be 3. This one, first one, another 3, and this 5. So we will be comparing the indicator values over 1 hour. Okay, and after that we are also going to rely on some of the price action data which we will retrieve using the get historical candle block info. We are going to need 4 of these, one of hourly time period, another 15 minutes, and 2 of 10 seconds, as is the customary practice. In most of the stations also I have used these 10-second blocks to pinpoint the exact entry point while placing the order. I will change this to hourly. Shift value of 1, another 15 minutes. Shift value of 1. So we will be looking at the price data from last 15 minutes, and this will be changed to 10 seconds. Look back period of 1. Shift will be 2. Okay, so these are going to be basic building blocks for our algorithm, and then I will also add some conditions to make sure there is enough of price momentum, and we will be looking at setting the condition that in last 15 minutes the price should have dipped good enough. So I think given the fact that we don't really have much volatility usually on the 15-minute time frame, the condition of even 5 pips should be good enough. More than 5 pips will be our requirement. So for that I will have to take mathematical component, and this is fairly easy. Default instrument pip size to be multiplied by a new variable with the start value of 5. A1 into A2. and this is going to be the minimum requirement. Okay, after that we are also going to take the difference between these candle 23's closing and opening value, and for that we need one more calculation expression block. And I think okay, we will carry out, but we will need two different calculations for buy side, one for buy side and another for sell side, and only looking at its price trajectory, if we see that for last 15 minutes, whenever we are looking for the buy trade, the closing value for last 15-minute candle should be higher than its opening value by at least 5 pips. So we will have to carry out two different calculations, and for sell side we will need its closing value to be less than its opening value by more than 5 pips, and 23rd its close and open is going to be A1 minus A2, and one more will be needed for defining the conditions for the execution of the sell trade. In this case also we have to look at the difference, but in an inverted manner. As its closing price is going to be lower, we are going to subtract the closing price from the opening price. A1 minus A2. So these two differences which we have calculated we will use while defining the conditions for the execution of the trade. And as we are running short on time, I will wrap up the session here. In next session, we will first build on the buy side requirement, and after that, we will focus on the sell side condition. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.